Welcome to The Explainer. Today, we are breaking down a financial strategy for a service business that produces a return of nearly 1,000%. Yeah, you heard that right. Let's get into it. Okay, let's just start with the headline number. We're talking about an annual return on investment of 985.6%, almost 1,000%. And get this, you'd get your entire initial investment back in just over a month. We're talking about 1.2 months. And to top it all off, imagine taking home more than 738,000 reais. That's pure net profit just in the first year. So the big question is, how is this even possible? I mean, for a regular service business, these numbers sound like they're from a different planet. It really seems too good to be true, right? But believe it or not, the answer comes down to a single, really clever strategic move. All right, first things first, let's actually look at the business itself. You might be thinking, okay, they must be selling some revolutionary new tech product, right? Nope, not even close. The foundation of this business is actually pretty common, very solid, but nothing out of the ordinary. So the business model is super straightforward. They have a team of technicians who provide specialized support services, and their clients? Major insurance companies. This creates a really steady, predictable, recurring revenue stream, which, is the holy grail for any service business. Now, take a look at these numbers. They're good, for sure. You put in 100,000 reais and you're pulling in over 144,000 in revenue every month. That's solid. But it doesn't explain that insane 985% return. The secret isn't in these numbers. In fact, this just makes the whole thing even more mysterious. Okay, so if the magic isn't in the business model itself, then where is it? Well, it has to be in the financial strategy. And that brings us to the real hero of this story, a brilliant little piece of financial engineering. And here it is. The golden key is something called the Factor R. That's F-A-T-O-R-R, or the R factor. Now, this is a very specific rule tucked away in Brazil's tax system for small businesses. And it's basically designed to give a huge advantage to companies that have a decent-sized payroll. It all boils down to this one simple formula. Get this. If your total payroll expenses, and this is key, that includes both your employee salaries and the owner's salary. If that number is at least 28% of your total gross revenue, bam, you unlock massive tax savings. It's just a simple threshold, but the consequences are absolutely game-changing. Okay, so you're probably thinking, how do you hit that magic 28% number? I mean, you don't want to just go out and hire a bunch of people you don't need, right? That would kill your profits. Well, it turns out there's a really elegant way to get there. It's this brilliant two-part system. So step one is your regular team payroll, right? The salaries for your staff. But step two is the clever part. The owners set their own salary. In Brazil, this is called a pro labor, and they don't base it on what they want to take home that month. Instead, they strategically set it to the exact amount needed to push the total payroll cost just over that 28% threshold. And this chart just shows you how huge the difference is. Look, without this strategy, the business gets dumped into a default, much higher tax bracket. It's automatic. But by hitting that 28% target, they qualify for this special, much lower bracket called Anexo III. And in that bracket, tax rates can start as low as 6%. It's a world of difference. So what does that mean in real money? The direct impact is an estimated 132,640 reais in tax savings every year. And let's be clear, this isn't some fuzzy accounting trick. This is cold, hard cash that would have gone to the government, but now goes straight back into the business's pocket. And you can see how this all plays out over the course of the first year. Now, as the business's revenue grows, the tax rate does creep up a little bit, even inside that good bracket. So you see the monthly profit adjust slightly. But the key thing is, the net profit is incredibly healthy right from day one, starting at over 48,000 reals in the very first month. Okay, so let's put it all together. Let's see how this one single strategic decision makes those mind-blown numbers we started with an actual reality. So there it is. By focusing laser-like on tax efficiency, the business hits that nearly 1,000% ROI. That initial 100,000 reais, it's paid back in just over a month, and they walk away with a real net margin of over 61%. That's just mind-boggling. This isn't just growth, it's what you'd call hyper-profitability. As the person who wrote the original plan pointed out, this strategy doesn't just make the owners a ton of money, it makes the whole operation incredibly attractive. I mean, what investor or partner wouldn't want a piece of this? It's really the textbook definition of working smarter, not just harder.
So, what's the big takeaway here? It's that sometimes the most powerful lever for growth isn't about selling more stuff or finding more customers. It's about deeply understanding the rules of the game you're playing. I mean, that huge profit was there the whole time, just kind of hidden away inside the tax code. Which really just leaves us with one final thought. What's the hidden R factor in your business or even your career that you could unlock?